What's happening, guys? Another Sunday Scan coming at you, this time for the 26th of July. We've got a lot to talk about. I didn't ask for questions this time just because a lot happened last week. I think there's a lot to talk about. And, I mean, this market is literally heating up week after week. And just when you think, maybe it's going to slow down a little bit, nope, it just keeps on getting crazier and crazier and crazier. And as you saw, it only took one name to start, bringing back the intense momentum. Not that the momentum ever left, but a trade like Neuro, N-U-R-O, ended up bringing all this crazy FOMO chase, you name it, back to the market where people are just making bad decision after bad decision, chasing these names to crazy heights. So that is awesome for us, for me, for you, because the opportunities continue to be endless. They really do. And if you're only a long side trader, you should really open up, your doors a little bit to kind of understand what makes a good short trade as well, because there has been plenty of those as well. First and foremost, George Sade, I think, unless it's sad, but Sade, I think. You've got the free T-shirt for this week. And then next week we'll be giving away a month of IU, and then we'll be back on track with Icon Meals and Scans and all the rest of those giveaways. Traders for Cause last week, I talked about it. I can't believe it. We sold out in 4 days. Most of it within 3 days, but the last 20 tickets or so went on the 4th day. There may be a little bit that we add later on for the regular price. That was the early bird special, but we are going to be adding different speakers, and if particular speakers come and their followers or their people can't come, then that stinks. So we're saving a little bit for each speaker to be able to invite their own kind of followers, and then if and when we have any left, we'll put those for sale at the end. So if you didn't get a ticket, there's still a chance. But for right now, we're completely sold out just because, as you guys know, and as I said, we try to keep this to a relatively intimate event where it's not 500 or 700 or convention style, but you actually have a chance to meet and greet everybody. You get to have a conversation with everybody. You get to have little small groups, as well as have time to listen to the speakers, the cocktail events, all that kind of stuff. So it's always a good event, and I'm glad that it was such a good response, because usually, you got to kind of twist people's arms right before to, hey, did you get your ticket yet? And the answer is usually no. This time, I mean, it's a good problem to have, but there's no tickets left. So swing trade, FWP, that was the idea. Nobody was talking about it at 7. Catalyst into September 6th. Like I said, it really reminded me of the UONE chart, and it literally looks like a carbon copy. So if anybody participated, you're almost sitting on a triple, which is pretty sweet. Again, manage your risk. Adjust your risk accordingly, right? You just saw MOXE. MOXE this week came down 40% on Friday. And there's been a lot of offers, and I posted that on Friday. There was like maybe 500,000 shares on the offer. And as I reminded everybody each week, you're sitting on literally a double, from 17 to it peaked out 31 a couple times. And the fact that it kept on failing at 31, I was reminding folks, make sure you adjust your risk. You're not going to get the top every single time, and you're not going to sell perfect every single time. You're always going to sell too early or not enough, right? So I still had some, but fortunately, it was staying heavy enough where I exited into the high 25s, mid 25s on a lot of the rest, and I actually put those back on towards the close. And we'll just see what happens with it. If it starts to fail, then I'm not, at this point, if it doesn't rally like it did the last time, then this time potentially could be different, and therefore I want to stay away. Semi was a fantastic trade last week, and it offered so much opportunity, and it was really an A+ setup. However, I think that everybody was on the same page. So out of the open, crushed it, had a great entry pre-market, faded off. My goal was 380s to 4, flushed for the cover. because I even said on broadcast it felt like XELA and MMAT, right? Where everybody was getting aggressively short because of the ATM. Everybody was aggressively short because it was easy to borrow, so on and so forth. And be aware, be cautious. So I even said all that, but I went back for it and thought because I had such a good read pre-market, maybe I'd get it again. And so I only had started in and then I put a little bit more on. But even that starter, instead of stopping out where I had planned to, I let it kind of, I felt a little bit more confident that I was right. And I let it kind of do its thing and ended up giving back that morning, the morning gain on semi plus a little bit more. So I went ahead and moved on. And then I started to focus on what would make a good trade again. So we went over it in the lounge, and as I said, I didn't have any. I didn't want to get aggressive on the front side of the move, and I wanted to wait for dip buyers to become pop sellers. So 650 was that level I was looking for to start to fail before I even looked at it again, and then 620s was going to be the confirmation level. Once 620s failed to follow through, I was going to use 650s as my risk for the potential unwind to 480 to 520s, and we got exactly that. So that was a great way to end the day. Plus, the following day, it was either the next day or the day after, it offered another gap up and nice unwind, but then they put out a midday PR, and it offered the best A-plus setup I've seen in such a long time because there was so many shorts on the wrong side of the trade with too much size that it went from a high conviction short to, oh my gosh, I have too much. I've got to cover. I've got to stop out emotionally. The night before, I went over and I posted on Twitter, what do you see in common between this time frame and this time frame? And the answer was the 695 peak, right? 695 peaked out over a period, I think, of 11 a.m. and then 2 p.m. to the penny. There was a huge seller there. So sometimes when you've got these circuit halts, they will blow through those levels and it doesn't even matter. But what matters is how it reacts after it blows through it, how it reacts if it stays heavy, how it reacts shortly thereafter. And we've had a lot of timely Sunday scans. We talked about pulling the goalie. So this is an example of pulling the goalie. They pulled that 695, they filled it, went up to like 720s, and then came right back to 695. After it came back to 695 and I saw the sellers refreshing there, that's when I went short. And it gave me the confidence to be patient. And I let it fade all day. I covered probably about 60% of it, 70% of it. I held about 30% overnight short. And my goal was 350s to 380 range. We got there, continued to go down to 3, but I didn't hold that long. So high conviction trade, pull the goalie, refresh seller, and unwind. It was fantastic. So the other part was the same thing that I said on SPCE. When SPCE put the ATM out, I felt like it was very negative. They weren't able to raise the $1 billion, so they had to go to an ATM. And semi, I feel like they were trying to raise via offering. I feel like they were going to try to get the whole thing off, and they were unable to fill that book. So I think that they didn't sell anything the first day, so then they put out that second PR, and instead of going the offering route, they just hammered the ATM and just sold it all the way down. So that's my opinion. I think it was fully scripted. I think that the company planned with the funds and all that stuff, but good luck proving that. But it's pretty obvious. They put the SSR on the day before the PR, and then they did the timely PRs right after the paper was ready. So checking all those boxes, to me, it feels like it was planned. Insane market right now. Not everything's going to be a neuro, but everybody thinks they're going to be in the next neuro. So you've got a lot of people that are pushing names out there. Be cautious of that. A lot of these are loaded up only to dump on you. We had VRPX last week. We had PRFX. PRFX was an intraday push, and you know what? Guess who's left holding the bag? All the people that are waiting to chase and to buy the next XYZ because they think they're getting in cheap. That's not the case. Be aware. Most of social media is not out there looking to help you. They're looking to make money off of you. They're looking for you to buy their shares at a higher price. So be aware of that. I don't. I hope it doesn't stop. You can warn about it, and hopefully a couple people change their ways and save some money. But it has been such a nice resource for extra money that I just hope that it continues and continues and continues, because it gets so many traders on the wrong side. And then when they pull back, it's 30, 40, 50%, just like we talked about last week. So it's very, very nice, but, be cautious out there. IGC, one note. Somebody on Josh had tweeted something, and then somebody had posted, oh, yeah, good. Yeah, you're congratulating a good short that started at 3, and, I don't remember the exact terminology or the exact words, but it made me think about how many people are selective readers, right? And I'm not saying that in a mean way. I'm not saying that as, you're not smart or anything like that, but literally stop reading what you want to read and read what's written, right? So for me, I have to dabble into a trade. I have to be in a trade to get the reads that I get. And I get some really, really good reads, but I would not have those reads by being on the sidelines. I have to be in the trade. So a lot of times I will start in. I'll start in, and as you guys saw that are in the room, IGC, I started in and I gave the key levels 280s, then 350s, and then I kept on giving those key levels that would make me scale into the trade. They never once confirmed. They might have touched, but that's not a confirmation. And for me, I posted the two charts side by side on Twitter. You guys probably saw. But I posted the prior moves chart pre-market, and I told the room that I felt that the 930 action would be the peak for the day. It was a carbon copy trade of the day before. I was prepared for that. My goal was to size in at open and scale in if the trade worked. My goal was not at. But I would not have gotten that read if I was not focused in and had a starter. So be cautious selectively reading stuff. Be cautious. You can't just take a ticker and a long or a short, right? You can't just take what you want to read or what you want to hear. You have to actually read what is written. Otherwise, you could misunderstand something and end up on the total wrong side of the trade. My goal for IGC was gap up, morning action, hopefully blow out the shorts, and get in there. And that's what happened. That's what I was prepared for. So keep that in mind, especially, it's not just about me or not you or another, but make sure that what you're reading is the full thing, not just what you want to read. Otherwise, you can end up on the wrong side very easily if you're that type of trader who gets conviction because somebody says something. SNTG, killer warning in the room at $40 per share. I shorted that and it faded down, and now it's into the single digits. I think it hit 5 or 6 on Friday. Big alert in the room to be aware of. I've been monitoring these things for months, and that's I think the 5th one in a row where things got really bad really quickly for anybody that bought the dips. So even if you can't short it, the thing that you have to be aware of is not to trade that bounce. It's just a great avoid, because these are all these Chinese boiler room type scams where they end up just selling all the way down. That's their only. They want to blow out all their stock in one day. So I think that's it. We'll get right into scan. I don't think it's going to be a crazy long scan tonight, and let's see what we've got for the week ahead. But firing on all cylinders. Be cautious on the front side. Patience is everything. Remember this. There is so much range right now. You do not need to be on the front side of the move. Okay? You can be patient. You can wait for the topping formation. You can wait for buyers, dip buyers, to become pop sellers. Okay? If you do trade the front side of the move, make sure it's a small percentage of where you want to be. 10, 20% where you want to be 100% later, right? If you are fighting size on the front side of the move, it is a great market to blow up in. And this is where I learned many years ago this same type of action, what not to do. So I'm repeating what not to do because I've been there. I've learned. And so you can either, take it or leave it. But I've been there. I've been on the other side of neuro, in the past, and it's not fun, right? Wiring in or having to do something, giving back a month, giving back 2 months of gains is not fun. So be aware, be cautious. And the best thing that I did last week, I took neuro off radar. That simple. I took neuro off radar. Why trade it? If you're right, great, you'll be rich. If you're wrong, great, you'll be broke. 50-50. That easy. Take it off radar. All right, let's get right into scan. All right, guys, so first and foremost, I am not a financial advisor. These are not buy or sell recommendations, okay? This is for informational and educational purposes only. So if you're not okay with that, shut this thing off. If you're okay with that and you understand that these are my plans, what I'm looking to do, how I'm preparing for the week ahead, then by all means, continue. NAOV, insane alert. TradeHawk posted it in the 70s. There was a ton of opportunities, 70s, 80s, 90s, you name it. And there was a lot of size that came out and got short. And I think that a lot of people are probably on the wrong side, even still. It's possible that they blew everybody out after hours, but it's unlikely. It's not always about where it goes, price range. It's not always about how far it pulls back. It's about how much volume actually prints, right? So sometimes it could flush down, but if there's no volume there, then how do they get out, right? So they're still in. So these are the types that get people on the wrong side very easily, and it's a great way to ruin your Friday. Went into a couple circuit halts up, went circuit halts down, then it fails into the close, and then circuit halts until the close, opens up after hours, and it's up, a buck higher or so, right? And there's nothing you can do. So pretty much everybody, in my opinion, is stuck from a 220 to a 250 average. So what that tells me is that if we open up at 320, 350, and we fade down to 270s, 280s, ideally not too much lower, maybe 250s, but as long as we base 250s to 270s, I don't think that shorts are out. And I actually think that shorts will probably add, right? So now they have more size, and if it holds that trend, we have the potential to continue to go 350, 4, 5, so on and so forth. That's one plan that I'm prepared for. The second one would be a gap up, 350, 4, 5, some type of blowout move, and then I'm interested. So those are the two that I'm prepared for. The one's a long, one's a short, but there's no reason to not come in with two plans. NRXP. Really nice opportunity. I actually got long at 11, sold out at 15. Next day it held on. This we knew was a catalyst. I mentioned in the room, be cautious. We've got a kind of a liquidity trap type event here, especially with the catalyst in the coming days. That was, over here. We knew that the 21st, they were going to be speaking at a conference, and then you could probably expect a PR. The volume is insane on this, so it very easily could continue, but nothing or not everything is going to be the next neuro. So be cautious sitting in there thinking that it has to keep on going. It had a nice little headline or a write-up into the close. That's what fueled it. So I think that just squeezed everybody else out. Very easily could continue, but I'd be watching probably versus this 29 level or so. Higher the better. Be cautious, though, if you see it coming down from 29, 28, 27, and you start to get really bearish 25s. All that could be a trap pre-market. So for me, unless it goes nuts pre-market, it's probably going to be an avoid until I see the open action. Then, failed follow through. So those are my main two watches. I think there's going to be plenty there. But right now we're in a market where, it's good to be familiar with all these. I have been going back to a lot of these names, but when you wake up and there's 10, 12 stocks that are up 200, 300, 100, whatever percent, it's kind of hard to, be very prepared, with all of these when there's just so much other stuff going on. With that said, if you stay prepared, SCKT, IGC, Semi, and IPA. These are on my failed follow-through watches, right? So higher the better on each of these. But whatever is the hot name on Monday, I think that these are going to fall off people's radars. So SCKT was, again, sign of the times. Actually, a newsletter pre-market was trying to shove it higher. For me, I did not get a huge portion of this trade because it wasn't my main trade. But there was a nice failed follow-through momentum. You can see, looking left from pre-market, you had this exhaustion move. But for me, I like to use pre-market highs as sort of that risk, that anticipation. If I wanted to react to a trade, I want to see a ramp up in a stuff using this prior level of resistance as that risk, right? So fantastic trade. I did not short into this pop, but I did join the trade for the unwind, and I took a small piece of that trade. So that was really nice. IGC, fantastic trade the last 2 days. Nice unwind. Again, this move should look extremely familiar to the prior time that it ran. One thing to take into account, Sava has, I think, data this week as well as some big conference. So SMPX, I think, has data. I could be wrong on both those things. So don't quote me. Check it. But I think I recall having that conversation. So I think there's going to be a lot of stuff this week with these. So if that is the case, then people may be taking IGC for a ride too. And, it did come down on relatively low volume on Friday. So there is a good chance that if it flushes out off the open, that we could have a nice rally. Higher the better. Look at XELA chart. I'd love to see a rebound, and then all failed follow through momentum. And I'd like to trade that one as well. Semi, same deal. We've already gone over it. In my opinion, full-fledged pump and dump by the company and the funds. But, good luck proving that. You can see here what I was talking about. They put the SSR on the day before. They walked it down, hit the 10% drop. So they had SSR on this day. And obviously that was that. But if it gaps down, flushes out, there's probably going to be a good 30, 40, 50 cent rebound type trade in it. But if it gaps up 30, 40 cents, I'd love to fade it down just like we've traded with XELA. It's been a fantastic opportunity, fantastic trade. But be aware of, maybe a little bit of a pop like this on IGC and Semi. But in the end, I think that it ends up panning out like this. I don't think it's going to go back up. I don't think it's going to go higher at all. I think it's a different scenario. But I want to be cautious of that rebound trade because there's a lot of volume. And then I'll be looking to trade that fade. SPCE, higher the better. So far, so good. Same concept as Semi. ATM, absolutely demolished longs and fantastic unwind for sure. IPA, I feel like this one might fall off people's radars, so I'll be watching this one. Ideally, it pops back up, gets maybe up towards this 9 mark, prior day's VWAP, and then starts to fade off people's radars. I would note that we had about 100 and some odd, 120 maybe, 120 million volume, and then only 9 million. So if this consolidates, we get another PR. If it consolidates, we start to have a trend. Keep that in mind because there's a lot of shorts potentially still in this, and if the trend holds, it could easily squeeze them out. CCL, NCLH, really nice range lately, so it's on radar for me. Nothing that I'm too excited about. However, 9:45, 10 a.m. type trend joins is something that I would definitely trade. It's got great volume, nearly 30, 40, 50 million shares trading per day. Some of those days last week on the rebound were, up there 70, 80 million. So great opportunity, taking advantage while it has range right now, but nothing that I'm, crazy excited about. So again, that is under the failed follow-through momentum. So basically, higher the better. I'm looking for it to go back up, retest prior levels of support that became resistance, or at least just prior levels of resistance, and then fade back off. I don't need to try to find the top. You saw it on XELA. You saw it on MMAT. let these things rebound, and then once the dip buyers become pop sellers, they're very clean. FWP, anybody that has been paying attention in scan, you've got nearly a triple. As you guys know, I was getting in there in the 7s. Fantastic trade. I started my long at the end of June, and I did not sell a share until a little bit of it last week, just because it went nuts. And I am looking to potentially be patient on the rest. But at this point, it's a free trade. It's been literally one of the best trades ever, and pretty crazy. So again, it's a triple almost. Adjust your risk. You know, you shouldn't be wondering what to do. If you're wondering what to do, you shouldn't be in the trade, right? You need to have your own plan. So make sure that you're being smart around the core. My goal was something like UONE, and it literally is almost the same chart. You know, I had that first pop, consolidates, and then started to go. And this was a catalyst play as well, right? So that was into Juneteenth. And so the FWP catalyst play is still over a month away. So whether or not it comes in, we'll see. But we still have time. And so I would just make sure that you have a game plan if you're trading this thing. And again, just as a reminder, the idea was at 7. The idea was not at 10 and 15 and 17 and 20 and whatever. The idea was at 7. So very nice so far. AACG. This one I repositioned. I actually had a really nice entry. I was up a lot. And then it went nuts this day, and then it went to 5 almost after hours. I didn't sell any there, but it felt like it blew everybody out and started to get heavy. So I went ahead and sold some. Then I sold some sold the rest the next day, and I was like, well, maybe it was just a one and done. But after seeing Friday, I feel like maybe this was the cleanup trade, right? Where they get everybody out that wanted to sell, and they position in that day. And then from that point forward, they start to accumulate. They start to soak, right? So, for example, for me, where I loaded up a bunch of size this day, well, it went nuts. That's great. I was up huge, and then I overstayed, and then I bailed on the trade before, you know, it turned into a loser. And that's probably what everybody else did. Meanwhile, they stayed positioned because that was their whole plan, their whole goal here. So for me, you can see there's a buyer in the tape. You can see that it's higher lows. You can see that, whoops, let me do this one, trend line. You can see that they've been kind of absorbing all dips, and that's what I look for. So dips, lower the better. As long as overall trend holds, I'll be patient with the trade. So far, it looks good. And again, you guys should remember this thing has a crazy history. I posted the intraday chart a little while ago, but yeah, it went nuts. So all that I care about is volume, and it's got it. Speaking of volume, not a lot of volume. NSYS, this one has been an idea for about 2 weeks now. No chasing from me. I will not pay top dollar for this thing. I've been buying dips into it. It's a super thin play. But I just felt like it was one of those where it's worth the dollar risk downside for the potential in this market. You know, if it has news, it's going to be up $10, you know. So we'll see what happens. But for me, it was worth the risk. And so far, it's been working out well. MOXC finally pulled back. I replaced some of the sells into the panic at the close. But I don't have a heavy bias. You can see that they kind of saved this chart support into the close, but not really, kind of around that level. But my thought was maybe we get a gap up, push to 20, and then it starts to fade off. If that's the case, then great. I'm prepared for that trade. If it stays heavy, if it doesn't look good, then I'm not looking to overhold this portion of the trade any longer. So I had some great exits. All week in scan, it was the same comments. 31 has been peak. Make sure you address risk. Make sure you trade accordingly, and you don't have to hold for the next thinking that it's going to go to the moon. So anyway, I got lucky with some exits on the 25s and above, and like I said, I replaced those lower, but we'll see what happens with the rest. So that's it. That's all I've got for scan. The market's been insane. So I'm preparing a little bit, but at the same time, it's really just about getting here, seeing what's happening, 6, 7 a.m., getting a feel for it, getting borrows, and being patient. You don't have to be on the front side of these moves. Hopefully this continues to pay out the way that it has. It's been a fantastic couple weeks now, and my goal for the summer was to get away more. So I've been getting away midday, which is fantastic. I like hitting goals, and if you realize that's not a monetary goal, right? If all your goals are monetary goals, you're never going to be happy because they're always going to shift. You're always going to change the goalpost. So keep that in mind, and I think that's about it, guys. So I hope you guys have a good rest of the weekend, and we'll catch you guys soon.